AI stocks have been fueling the markets all year long, but over the past month, that momentum has stalled and bubble talk is growing. Well, Mark Ting is here to weigh in on the debate and on what investors should be doing as the market slides. So Mark, of course, is our guide to personal finance and a partner with Foundation Wealth. Hello there.
Hi.
We talked a little bit about this earlier this afternoon with our business reporter, but what do you think? Are we in an AI-fueled stock market bubble right now?
Hotly debated, and I'm on the side that AI is still in its early-ish innings, and we're going to be talking about AI for a while. So I do believe what's happening right now is people tend to get over their skis a bit. They get a little bit too happy, a little bit of too much FOMO, so valuations go pretty high. And then something changes, then sentiment sort of gets reduced, and we get a healthy pullback. So it's bubbles, like we talk about a bubble, bubbles can expand, and I think now some of the air is coming out of the bubble. A lot of it is profit taking, because this is probably the least popular bullish trend that we've had. Markets kept on going up, and people are like, how is this happening with tariffs and Trump and all that stuff? So now there's a point where it's been a pretty good year, so let's take some profits. Maybe it's prudent to do that. So I think that's what's sort of happening. So air is coming out of the bubble.
Okay, so besides profit taking, though, I mean, any other reasons people are selling their AI stocks?
Yeah, I mean, you look at the AI companies themselves, and some of these valuations are extreme. Probably the one that I would pinpoint is OpenAI, which does ChatGPT, and it's a private company. You can't even buy it, but there's rumors of it going for $1 trillion, and that sort of blew my mind, because $1 trillion, there's not many companies like that. But the other side is we see it everywhere. There's literally trillions of dollars being spent on these projects, data centers, GPUs, all this sort of thing. And now people are questioning, is there going to be a payback? We're investing trillions of dollars. Is it actually going to have the benefits that we think? Some people are questioning that. So hence, we're seeing some selling pressure. Okay,
well, taking into account all those reasons to sell, what makes you think that the stock market is going to recover from this dip?
Because it tends to recover. Like we saw a big drop back in April, much bigger than this one, and it recovered quite quickly. There's a lot of tailwinds as well. The money is being pushed in there, pushed into the system. And recently we saw some of that liquidity, which is money, sort of being clogged up. Like so the US government shut down. So when the US government shuts down, they can't issue checks, money isn't going out. And now that it's opening up, we think that there's going to be some unclogging, some of that liquidity going back into the system. So maybe there's some sentiment are going to change. Now, in terms of bubbles themselves, bubbles do not scare me. Bubbles go up and down. That's perfectly normal. That's healthy. We've been in a housing bubble, we can say in Vancouver, for decades. What people are really concerned about are bubbles popping, and that's where valuations drop steadily, very fast, deep declines. And for that to happen, typically there's a couple signs. The first sign is euphoria. That's FOMO. That's when everybody's talking about, at hockey games and the cab, this is going up and up and up. We got to get in before we miss out. We are not seeing that type of euphoria right now. What we're seeing in AI is a wall of worry. People are doing the opposite. They're thinking that it's going up too much, and that's why they're taking profits. The other thing that we see in terms of bubble popping is excess leverage. So when people get overly enthusiastic, they take bigger risks, they leverage. And what we've seen over the last week or so is a deleveraging. So we're in a situation right now where there's no euphoria, we're deleveraging, so that just makes me think that we're probably not going to pop. It's not saying that we're at the bottom or anything, but we're definitely not in a popping situation.
Well, what about, high-profile investors, someone like Peter Thiel, who sold all of his NVIDIA stock, a stock that was synonymous with AI, right? So does he know something we don't know? I mean, should we be following his lead?
So yes and no. So he probably knows something. Should he follow his lead? Absolutely not. So it's a headline. Peter Thiel sells $100 million worth of NVIDIA stock. Mm-hmm. Does that mean, should I read into that Peter Thiel thinks that AI is done, NVIDIA is done? No. If you look at Peter Thiel, he's a tech bro. Like he started PayPal, he's friends with Elon Musk. If you look at his holdings, it's Tesla, it's crypto, it's Palantir, it's all AI. So what he did was he sold, not today, he sold in the last quarter, and he sold $100 million. And what did he do? He rotated it. He bought Apple and he bought Microsoft. So that's the context we have to look at. On the flip side, during the same period, Warren Buffett, not known for AI, he bought, I think, $4.5 billion worth of Google. So should I infer that Warren Buffett's all in on AI? Absolutely not. He bought $4.5 billion. That's a lot of money. But realistically, that's probably less than 5% of his portfolio. So what could be happening? People like Peter Thiel, profit taken. He sold it when it was high. And he could be buying it back right now as it's coming lower. We don't know.
We don't know. Okay, so what advice with this uncertainty and who knows and high-profile sell-offs, that type of thing, what advice do you have for someone who's worried about the markets falling further?
I mean, that worry is always there. I mean, the price you pay for sort of higher rate of returns is some volatility. To me, that's not a bug, that's a feature. That's how you get your returns if you stay invested. One of the biggest mistakes, I've talked about this before, is the headlines. I hate the headlines. They really focus on certain people. I'll throw somebody under the bus. Michael Burry. You might remember Michael Burry from The Big Short. So he made a phenomenal call in like 2007, and he shorted the housing market, made, let's say, billions of dollars. But when he made that call, he did it 2 years early. It's not like he did it and he made a ton of money. But also since then, he's been a bit of a one-hit wonder, right? So he's made that call. He's made a whole bunch of other doom and gloom type calls since then, and they never played out. And whoever took those, acted on those tweets or whatever he did, would have lost money or left money on the table. So there's a difference between, say, someone like Michael Burry and someone like Warren Buffett. Warren Buffett, I would say, is an extraordinary investor. Michael Burry made an extraordinary call. But guess who gets most of the headlines? It's Michael Burry, because he's out there talking about it. He wants to be relevant. So I would say just ignore all that. I would probably say ignore both of them, because you don't know what Warren Buffett's thinking, or I guess you know what Michael Burry's thinking. But you just want to ignore that. There's a whole bunch of tailwinds of why liquidity could be coming into the market. Typically, this is the strongest time of the year. There is some profit taking. I would just not worry about it. Open up your statement in like 2 months, and probably things will be at all-time highs again.
Okay, Mark, thank you.
Thank you.
That's Mark Ting. He's our guide to personal finance, a partner at Foundation Wealth, telling all of us just take a little bit of a breath here. Mark joins us every week at this time.